Hello viewers, welcome to the first episode of Reachiing's videocast, where we invite practitioners to discuss and provide insights on topics that are within Reachiing's 4 thematic areas and are relevant to our audience. In case you do not already know, Reachiing with the triple I is an online publishing platform making research messaging interesting, insightful, and impactful. We provide quality research-based information on government plus economy, technology plus innovation, business plus investment, and life-related topics in simple and interesting formats for young Africans and global citizens. All right, I'm Precious Akanonu, and on this episode of Reachiing Videocast, we will be discussing stock market investment, basically an introduction. And if you find the discussion interesting and want to learn more about the topic or other related topics, you can leave a comment. Now, let's welcome Hephzber Ifunanya Nwoka. She is a senior financial analyst at Meristem Securities Limited, where she is currently managing investment portfolios. Hello, Hephzber. Welcome.
Good morning, Precious. Thank you very much.
Thank you for joining in. So let's dive right in. First of all, I'd like to ask, what is stock market investment, and is it only for the rich?
Okay, stock market investment is any investment that has to do with buying or selling stocks on the stock exchange. And it doesn't just cover stocks alone, but bonds, exchange traded funds, and other financial instruments that are sold on the stock exchange. Then to the question, is it just for the rich? It is not. Because I know a 3-year-old who currently plays in the stock market. Of course, his mother helps him buy and sell the stocks, but he is the son of average parents. So that goes to prove that you don't need so much money to be able to trade in the stock market. As a matter of fact, stockbroking firms in Nigeria can set up a stockbroking account for an investor at zero charge. Then when the investor is ready, he or she can bring in any amount they have at that time. It could be 5,000, 10,000 naira, or even less. So you don't have to be rich to invest in the stock market. You can start with whatever amount you have.
Amazing. Thank you for that. So that brings me to the question, what are the classes of stocks that one can invest in?
The classes of stocks are basically Class A and Class B stocks. I will demonstrate this with an example to show the differences between both classes of stocks. Okay, so let's say that a company which used to be private now wants to go public. The major concern of such companies is to protect themselves from a hostile takeover. In order to ensure this, the company would decide to have Class A and Class B stocks. Class A shareholders would have voting rights, whereas Class B shareholders would not. For this reason, Class B shareholders cannot take over the company if they are able to acquire as much as possible of the shares, because their share is Class B shares. However, both Class A and Class B shares would get dividends when the company shares those dividends or distribute them to shareholders, depending on the profits the company has made for the year. Thank you.
Thank you for that insight. So, as a newbie in stock market investments, aside the classes, what should guide my investment choices as a new person trying to make investment in the stock market?
All right. What should guide your investment choices as a newbie is majorly your risk appetite. So the question would be, are you a risk-adverse investor or a risk-loving investor? If you are a risk-adverse investor, then you would want to focus on blue chip stocks. You're talking about stocks that have been on the stock market for a long time and have a consistent dividend payment record. Such stocks include Apple and Microsoft. You know that when you buy these stocks, well, they wouldn't necessarily depreciate in price at any time because they have a history of being well managed. So it gives you a slice of peace of mind as a newbie. On the other hand, if you are a risk-loving investor, then you want to go for penny stocks or stocks that have great potentials for growth. You're talking about new social media apps that just had their IPOs. You want to get in and buy those because you believe that in the future they will do very well and you don't mind taking the risk. So the major thing to consider, the major factor to consider as a newbie is your risk appetite. Thank you.
My next question is, but before that, people like Robert Kiyosaki would say that to be a successful business owner or investor, you have to be emotionally neutral to winning and losing because it's all part of the game. But most of us, we do not want to lose a lot. At least let the gain be way more than the losses. So how can I minimize my losses and grow my gains in the stock market?
Minimize your losses in the stock market, you must embrace portfolio diversification. What do I mean by portfolio diversification? It means that, let's say you have funds today to invest, you should not invest all of them in the stock market. You can decide to invest 50% in the stock market, 30% in bonds, and then 20% in other cash-backed instruments such as fixed income or mutual funds. After doing that, it is important to note that the 50% you put into the stock market should not just be used to buy one stock. You can decide to diversify across different sectors of the stock market. For example, you can buy some consumer goods stocks, you can buy some banking stocks, some insurance stocks, and even telecommunication stocks. Just spread your funds across blue chip stocks in different sectors so that when one sector is not doing well, the other sector will do well. And remember, you also have bonds and stocks. The importance of spreading your funds across these asset classes is this. The stock markets, or generally stocks, are negatively correlated to bonds. That means that when stocks are going up, the bonds can just be where they are or they will be going down. So you're secure on one end. On the other hand, when the stock market crashes, the bonds will do very well. So either way, regardless of what is happening in the economy, you are safe.
So the key is diversifying your stock market investment portfolios across different sectors and asset classes. Awesome. So this question now is what I think everyone will want to know at this time. How can I build my stocks to be safe from coronavirus crisis or other future economic shocks that can affect gains from stock market investment? So how can I safeguard my stock during such periods?
Okay, to be able to protect your stocks from those kind of economic disasters, you would have to learn to time the market. So you'd have to fix your eyes on the news and watch TV, listen to the radio to be able to get accurate and timely information at every point in time. So if you hear that such disaster would occur, you'd want to pull your stocks. So in other words, you want to sell your stocks and pull the money out and invest your money in the bond market. Then when it is all over and the stock market rebounds, you can then pull your money again from the bond market back into the stock market. Thank you.
Thank you for that. But what if I don't want to go through all that stress of following the news and properly timing the market and just trading on my own? What can I do?
Okay, you would have to engage the services of a reliable stockbroker or financial analyst to help you keep an eye on the market, to be able to advise you on when to get in and when to get out. I'm currently a financial analyst at Meristem Securities Limited. Our job is to ensure that at every point in time, we inform our clients with timely information to enable them make great investment decisions about how to grow their portfolio. Thank you.
Thank you so much, Hephzber, for all that insight and for joining us today. We hope you have time to join us some other time to share more insights. And to our viewers, thank you for watching. We hope you found this really insightful and useful. Please feel free to drop suggestions for our next topic on business and investment or any other thematic areas on the Reachiiing. Until our next episode, it's a wrap. Thank you for watching.